What's the difference between a meme stock and a blue chip stock?
A blue chip stock is that it actually has real value. I was in GameStop actually 3 weeks ago with Xander. It was 3 people in there, including the person behind the cash register.
Yeah. But also the people that are influenced have more influence, right? So a meme stock gets influenced by somebody that's on Twitter. A blue chip stock gets influenced by Jerome Powell, president of Russia.
When you say Jerome Powell, those are economic catalysts or fundamental catalysts or technical catalysts.
Not necessarily. So let me start. All right. So what's stopping China, Russia from having a full-fledged campaign to discredit, take down, even if it's 2%, that's billions of dollars of Apple, right? It's possible.
Yeah. And can we be Roaring Kitty worked at a hedge fund. He's not Logan Paul.
But I'm just saying, so if one person has that, like anybody can have influence over the stock market. That's my thing. So it's like, it's easy to move this, but there could be smear campaigns at the highest level for legitimate companies, and it could work. Mm-hmm. And billions of dollars can be lost for no reason, not because the company's not a good company, because there's a group of people that, for whatever reason, they want to manipulate the price.
Yeah, but it's not gonna. So in that case, right, you're gonna see it.
It may work for 1 or 2 days.
Right, you're not gonna see a 90%, 100% increase on a mega cap company because of no technical reason or no economic factor that led to that catalyst or that. Whereas this is like, what is the reason? There is no reason. It's just that we saw a tweet and it's running up, and people are looking to say, all right, we can make money fast. Now, everybody likes to make money, great. But that's why, and it goes back to the original question you asked, and you led with it, but I think you led with the answer. It's the education around it. You don't feel as confident. There is going to be mistrust, and it should be. But if you get educated on why the mistrust even exists, then you have a better perspective. If you understand why this financial trauma exists, you'll have better perspective. When you understand long-term investing, when something moves up in a day or your brokerage account doesn't open, the few hours you're not even, okay, it didn't open. Yeah. Okay, how much money do I have in there? How much is insured? How much can I get back? How many brokerages do I have? Do I need to look at all? There's an education process that kind of eases some of those tensions, and that education process continues, right? So now even Ian saying, go look at the disclosure. I'm aware that, yes, they can freeze the market or they can close trading for specific equities, right? But can they close it? Now I got to go back and educate myself even more, right? So there's always an education process that makes you feel more confident if you're going to be inside this space. I think
since 2020,
the answer, I feel like.
Yeah, Rashad, back to your point about Russia and China. That's why I always scream Vanguard and BlackRock. And I know people hate it because they're like, yo, give me something else behind 2 Tech 2 Index. If I own part of Russia and China, you can't do a smear campaign against me versus something I own. Kendrick's not going to talk bad about Top because relationship and money's been made, right? Vanguard owns everything. Panama, waterways, music, prison systems, part of Apple, blah, blah, blah. So if you are investing in the biggest conglomerates, that is the moat. Like Vanguard is the virtual financial B613 from Scandal.
Vanguard, BlackRock, everything inside of technology, those two.
How I would answer it is this.
What are you answering?
You have a probability of getting screwed in anything in life. Nothing is bulletproof. You have a high probability of getting screwed some places. You have a low probability of getting screwed some places. So life is about mitigating risk. It's like
absolutely.
It's like getting married. You still have a probability of getting screwed by the person that you're marrying, right? It's possible. How do you mitigate the risk to kind of have low chances of that happening? But you still got to have your umbrella because anything can happen. So when you're looking at stock, this is why we say bringing this full circle. This is why we say invest in the S&P 500.
Yep.
This is why we say invest in ETFs. This is why we say invest in the largest companies.
Yep.
Because theoretically, anything can happen. You can. I don't want to fool people and say like you can still lose your money, right? Worst case scenario. But in the worst case scenario, if every stock goes underneath and Russia finally pulls the big button, and well, we're all screwed anyway in that sense. It doesn't even matter. as opposed to the alternative of having hundreds or millions of dollars in cash. You're at more of a risk in there. You're probably going to get robbed, or in the case of Nipsey Hussle and Black Sam, where they actually buried the money, Pablo Escobar, it got molded. That's not really the best way to go about it.
Yeah.
Real estate is not 100% safe either, right? We see in California where houses are actually falling off of cliffs. So you could put all your money in real estate, but you just have to be mindful, careful.
And they won't even insure some of them homes now in California.
Stop.
For sure. Even if you put all your money in gold, right? Well, that's still a security risk. You got to insure it. And we don't necessarily know for 100% that gold has to go up. It has traditionally gone up over the course of the last 3,000 years, but anything can happen. People can lose interest. We could discover a new precious metal that surpasses the need for gold. So anything is subject to loss. So you as an investor, your job is to actually find the things that mitigate risk the least, diversify, and proceed with caution that way, as opposed to having the most exposure in very risky assets that you have more likelihood of getting screwed over. But you can get screwed over in anything, just for full transparency.
Yeah.
But like I said, if the S&P 500 goes to zero, is it possible? Yes, it's possible. It's possible you could put $1 million in the S&P right now and you will have no money in 10 years. That's possible. But if that happens, then life as we know it is probably over, and
who has money?
Money wouldn't necessarily matter anyway.
Yeah, you've been walking dead.
But it's possible. So, like I said, it's just, I think we have to actually, speak on that, because anything is possible. But like I said, there's really no alternative that's 100% safe. There's nothing that you can do that you're 100% safe. So I'd rather go with the 98% safe, 97% safe, as opposed to the 27% safe, 16% safe. Now you're playing a very risky game.
Yeah, I think that's the cumulative answer, right? Educate yourself. When you have the education, make sure you take you mitigate your risk, right? Yeah. If you have all those things in place, invest in long term.
Hold for 5 years. It's hard to lose if you're holding for a 5-year period. Most recessions last 2.7 years, and buy at the right price. Quit buying at the top of the market and then being upset.
Yeah, for sure.
So,
all right. Okay. Speaking of stocks, let's talk about Intel. Intel is down 40% year to date. After another rough week. We
told you.
We know you hate.
Hey, boy, who keep writing on my YouTube. You gonna say I'm right eventually or no? That was with ego. My friend on YouTube. Am I correct in my assessment yet? But today I got a trick for you. Go ahead, Rashad.
So what price would you load the boat on Intel?
So I think it's fair, if I don't like a stock, this is the reason I brought this up, to give context around prices you want to buy if you do believe in it. So if you write the Fibonacci from high to low, so the high on Intel is 75.83 back in 2000, crazy. And a low all time is 34 cents. The 23.6 will be 18.04. If I can, and that's the low of 2008 and 2009. I'm not gonna lie, if they got to 18.04, I probably will buy a lot. I still like TSM better. I like ASML better. I like Nvidia. I like AMD way better, no question. But if it got to $18.04, I do believe it can get back to the 50% retracement, which is 37. Pretty much double your money. Going back to probabilities and buying price, put in chat. The price that you buy determines your return. It's not just about the asset. It's about the price that you buy. So at 18.04, I do like it. But if they get to that level, we could be in some trouble. We could be in a recession-like environment that they will announce. So 18.04 is why I like it.
18.04. I mean, another bad week. They lowered their future guidance. They were trying to have a deal with Huawei in China, Beijing. They said, no, we can't use those chips. Furthermore, reduce their yearly outlook. I read this on Kipling. This is interesting, man. You know how we always do, like, if you invested $1,000 in a company 20 years ago?
Oh, yeah.
Did you see this?
No, I ain't see it. Tell me.
So like if we invested $1,000 in, well, Apple, let's say 20 years ago, it has gone up, what, 39,000%? Some
crazy amount.
If you invested $1,000 in Intel 20 years ago, do you know what the worth of that $1,000 would be today?
$450.
$2,000.
What?
$2,000, man.
I mean, you still got a positive return. Well, with inflation,
that's a good.
No, I'm saying 20 years. I'm just saying in that time frame. If you 1,000, I'm not in 20 years, 1,000 turned into 2. Right? It's not a negative. But in that same, let me finish it. Let me land it. Let me land it. In the same time, if you invested that $1,000 in an AMD, and in, I mean, obviously Nvidia,
better kill YW.
Right? If you did that in TSM, like if you picked a bunch of semis, super, if you
Starbucks, McDonald's, Home Depot.
I'm just talking in their sector.
Oh, in their space, got you.
You're talking about triple, quadruple in terms of percentage gain.
One thing I learned in life is that you can never lose by making money. Sometimes you miss out on things in life, but as long as you don't lose money, as long as you're making money,
so now
you can't go wrong.
Here's the question, right? If you put that $1,000 in today at that rate, when you see that AI is at the forefront of pretty much dominating every industry, what would that $1,000? Is it at? Have we hit the point where it now begins to depreciate?
Yeah, for sure. Intel is probably not the company to invest in currently.
Nope.
We have a guess.
20 years ago.
Well, we got to tell it. I mean, they're part of the infrastructure bill, so we got to make sure that people understand that. All right.
Well, maybe the president can come on and talk about the infrastructure bill. We just spoke to the vice president last week. So, maybe we'll have a conversation about it.